Hey, welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and founder of the Oxen Group, and it was a very nice day we had in the market today. We'll get to the Thursday market wrap up. After that, we'll be looking at our position in LDK Solar, as well as our entry into Discover Financial, some of our other current positions and positions we took today. We'll also be talking about the new Oxen Group Equity Analytics that we're going to be coming to the Oxen Group soon, and also give you a forecast for tomorrow. So the market recovered very nicely today. We had strong economic reports out this morning that helped us really focus on the home front. In the last 9 days, we've given up basically all of our gains for the entire year, and today was a chance for us to refocus on the American economy and see just how strong it is becoming and just how much of a recovery we have made. So, for example, we had jobless claims come out today. They dropped from 397,000 last week to 385,000. They created their lowest 4-week average since 2008, and they beat estimates of 386,000. We also saw the Philadelphia Fed Manufacturing Index increase from 35.9 to 43.4 from January to February, and that beat estimates of 28.1. And that's actually a key number, 43.4, because actually when you see these indexes like this, a 50 number is a neutral number, and then anything below 50 shows weakness. It shows that it's not a positive. And then anything above 50 shows positive, so growth, and a very solid, a very fundamentally positive market. And so as it nears 50, we're actually going to see what would actually be called a healthy manufacturing market in the United States if it can reach 50. And that's a really strong point for the economy that hasn't been seen in some years. And here you have a chart. This is initial unemployment claims for 4-week averages. And you see that it's dropped here in 2011 to its lowest level since 2008. So that's really positive for the market, coming back to where they were back in '07, between 300 and 350,000. It's a very healthy area for it to be in, and we're getting closer and closer to that level, right below 400,000 right now. So as we see the market, we opened higher on the good economic reports that we got, and pretty much held some ups and downs throughout there, but mostly filled all the gaps and moved up on any weakness and any dips. And then we had this sort of really large sell-off right after the lunchtime lull that we had, and from 2 o'clock though up till 4 we rallied back up, filled that dip, and then actually closed higher than we had opened the day. And I think that was a really nice bullish sign to see at the end of the day from the market. Started out the day with a great day trade in LDK Solar that we got an average gain of 2.19% on, and we were able to get in the stock at 12.10 and exit at 12.22 and 12.50 within 20 minutes of the open, and that was a real positive for us. As the reason we liked LDK so much was because the company looked very strong with earnings coming out this afternoon, and there was an expected almost 200% increase in sales year over year. And then what we were a little worried about the market, obviously, with how things have been going as of late, with the nuclear crisis, there was a possibility that we could gap up and then drop throughout the day. And so we wanted a position that had both a fundamental catalyst, but also would be able to maybe stay higher if the market were to sort of pull back on any kind of nuclear fears again, or anything like that, or any developments out in Japan. And so since this was a solar position, it was going to act as a nice hedge against that. So we had, if the market stayed positive throughout the day, we would be able to see it follow the market and have that fundamental catalyst helping to bring it up. And then at the same time, if anything dropped on any kind of nuclear fears, then we could have that sort of solar hedge that's been working for solar stocks as of late. And here you see the chart we got in here. Another, the technicals were very solid for it too. It was right on support, and you saw the fast stochastics were trending up. RSI was right at the neutral point, so the stock had the ability for a lot of gains. It didn't really move too much higher throughout the day. We actually were able to get out pretty close to the high at 12.50 for the day. It worked out for a nice quick day trade and a nice gain for us And in a leveraged portfolio, a 2.19% gain is really could be worth almost $300. So. We also entered today at Discover Financial Services. They are the maker of the Discover credit cards and Discover loans. And we like this stock. As you can see, there's a number of reasons to like it. What we have here is a lot of strength, and all the way back from here. And this stock is basically just a great upward trend that it's been working on right here. As you see, the 20-day exponential moving average just moving right up, and the stock has just followed that exponential moving average right all the way up. And it has leveled out a little bit, but every time you see it levels out a little bit, it just moves back higher. And the fundamental catalyst here, back there, was earnings were coming up. So we see this leveling out right again before earnings, and we're expecting another nice breakout. And we were able to get in today at 21.51. The stock went all the way to 21.79 before sailing off a little bit, and we were looking for our first exit for a 2% gain at 21.94. And you see the RSI. This stock trades usually between the 80 range and the 45 range. It hasn't dipped below 45 since 2010. So this is the lowest the RSI has been since the beginning of the year. This fast stochastics have hit a bottom at 20 and now are going back up, and this was the first green day for it in the 2 days down. So this was a nice day to enter in the stock. We think that the stock is back, hit its 20-day exponential moving average, is going to rally right off that point and continue higher. And it's got really good earnings coming up. The really key thing about it is that they have a loss in the year ago EPS, and they're expecting to increase significantly over that with a 0.50 EPS compared to the negative 0.22 EPS they had 1 year ago. So this is a very fundamentally sound stock with really solid technicals and a really, really, really positive moving direction for it that looks like it's going to continue higher. Also, we entered a position in Denny's today at 407. This stock has been in a really nice upward trend as of late. We're not looking for a ton on this. This comes off our $5 list, which is basically our really technical side of stocks. We pick stocks that are between usually around $4 to $6 that have really. When the stock is at that, it's a real trade. It's a trader stock, and so these stocks tend to follow technicals very closely. And that stock was setting up for right on a nice support level today, and has been in a really great upward trend. And it doesn't seem like it's going to slow down anytime soon. And we were able to exit actually half of the position for a 1% gain. Just a quick scalp. Not looking for a ton on this, but every little gain helps, and this will definitely looks like it's going to continue up from this level. We also attempted a short sale on the reverse side on Standard Pacific, but we were stopped out for a 1.5% loss on that one. And we entered the day with no other new positions, so there's not a lot other to report. We still are in FINRA position, but we've been holding that for quite some time. And we got out of basically everything with the market just continually declining. And we entered the day with no other new positions, so we're going to continue to basically reload at this point, looking for those opportunities. I think the trend is sort of like, well, let's just buy anything right now, and I don't think that's a good idea because I think the market still has a lot of risk out there right now. There is a lot of good value out there, but unless there's that fundamental catalyst to get something going, it's not going to just move up just because. And so we're going to definitely continue to look for those value options out there. Quickly, I want to talk about our new and improved long-term rating feature on the site, which we're going to be introducing hopefully at the beginning of next week with the official launch of Oxen Group Equity Analytics. And basically what this is going to be is we're creating some analytical tools that we're going to be able to develop on a fundamental basis to evaluate stocks. We're going to have 5 scores that we're going to be looking at for different stocks and different sectors. These scores include value, profitability, management, financial health, and growth. And we're going to be able to take these sector, value each stock into these scores, and then create basically a sector-wide assessment of what are the top stocks in this sector based on what score you're looking at. So what's the best value investments in this sector? What stocks and companies bring about the most profitability? Which one has the best management? Which one has the best financial health? Which one has the best growth? Create overall comparisons, and then be able to look at, what are the strongest stocks given all five, what stocks give us the best value investment, which are some of the best growth plays, and then be able to compare sector to sector and industry to industry overall. And we're right at the forefront of this development, but we think this is going to be a great way for us to not only improve the long-term section of the company, but also to improve on the short side. Because once we identify these sorts of trends, we can identify, fair value estimates, where a stock is really actually undervalued, where a stock is overvalued, and then identify positions to get into when stocks move into certain ranges. For tomorrow, I think it looks like, the worst is over as far as us pricing in the Japan crisis. But I do think new developments could definitely take this gain that we got today and really just wipe it all out. That's why we took some of the gains that we had off the table today, and we were not looking super long term. We got into a lot of things that we wanted to just kind of day trade today, because at this point in time, it's really hard to say I want to buy something when you've got the possibility of a really big nuclear meltdown on the forefront. We had weak earnings and after hours from Nike today, decent earnings from LDK Solar. There's no economic data on the docket tomorrow, and we have expiration dates. So I'm looking at tomorrow as, I hope we can continue in this rally mode, but there is definitely some possibilities for a pullback tomorrow and some quick profit taking to happen. And if that occurs, we could see another downward trend tomorrow. Well, that's going to do it for today. Visit us at www.theoxengroup.com. Please email us at contact@theoxengroup.com. Call us anytime at 1-800-709-1160 and be a part of 70% accuracy. And real quick, if you visit the website today, be sure to check out our free trials that we have on the site. You can sign up on the site at the Are You New trial section, and be sure to join our mailing list to catch up on all the Oxen Group nightly news, all of our new breaking developments, and I hope you have a great trading day tomorrow.